What's up, guys? Bulls and the Bears here with the weekly recap video. I am so annoyed right now. Today was a horrible finish to the week. The accounts here, 24-8. Okay. We're down $1,200 today. $1,200. Let's do some math here. If the account's at 24-8, and that's after we lost 1,200. Where were we before? Where were we at the open or at the close of yesterday? We were at 26,000. I was so excited for this video yesterday. Couldn't wait to show you guys that the account was up even further, another 1,000 in market value from last week into the 26s. It would have been great. But we're back in the 24s because of today's massive sell-off. So last week we ended around 24.9 right here. You can see as I'm toggling the line graph. And then we were steadily climbing. The Amazon position I'm in was doing great. Got up to over 26 yesterday. 26 this morning. And then the news of Trump threatening for a massive, quote unquote, massive increase to tariffs against China. It was announced that he's calculating. Breaking news, Trump is calculating a massive increase in tariffs on China. Nothing has been official. Nothing has been instituted. It's just, that's the headline. It's in the works. So there's a chance it could just be nothing. But right now the markets see it as something, and the market took a dive. My Amazon position, Amazon's down over 4% today. So I went from 26 down to the 24s. So frustrating. I was so excited to possibly close my Amazon position today. I'll show you the charts. But yeah, that's basically what we're dealing with. So that means on the week, we're basically flat. We're down $100 on the week. Okay. Hearing that, it's not the end of the world, but knowing where we were just yesterday, just 10 hours ago. Such a frustrating way to end the week. But let's get into the positions. Let me show you the charts. Let me show you what I'm dealing with here. So here we are. Amazon, my DocuSign, hand in the cookie jar trade, and Okta. Just to recap with DocuSign, this will be like the last time I talk about it in this video. I sold a put last week. It got threatened, hand in the cookie jar. I was forced to roll it out to the end of the month, and it's the 68 strike. So, and DocuSign's at 68.38. So basically at the money, but we have a couple more weeks left on that. Amazon and Okta, those are the only two core wheel strategy trades I have on. They all declined. Here's the P&L on the day. So Amazon, my Amazon position lost $870 in value today. Okta lost about $300 in value today. Look at the open P&L over here. Amazon, I'm down 39. Okta, I'm down 260. What does that mean? That means before today, these were all green. Amazon was up $850. Okta was even up about $60. Great. Everything was green. Everything was rocking and rolling. And Amazon, Okta, that sucks to go from green to red. But Amazon is what hurts the most. Not only is it a bigger dollar amount, but I was this close to closing it. There's a fly in here. I was this close to closing the position. I really thought I was going to be able to lock it up today if we had a nice green push. Lock it up, book a massive gain, a huge successful trade, and get it off the books. But instead, we're red. I thought it would be a plus $1,000 locked up profit, and now all of a sudden the position's red. Oh. It is the worst. And it gets worse beyond that. Because as I sit here staring at the screen, you can see right here, what's this column say? This is mid. What does mid mean? Well, depends how you use it. In this case, mid means the mid price between the bid and the ask of whatever instrument we're looking at. So because this is Amazon, this is telling me that the mid price on Amazon, the stock, is $214. So if you thought we were red now, just wait to see what happens on Monday or Tuesday. Monday's a holiday. Wow. Okay. Let's go to the charts. Let me go to TradingView and see what the heck's going on. What a day. Down 2.7, wiping out the last, well, we're back to September 10th prices. So we wiped out the last month. And what's crazy is today we hit an all-time high. We went from a never before seen print on the S&P to wiping out a month's worth of price action. And if you count after hours, it's even worse than that. So if I go to the 1 minute, oh yeah, we'll look at that after hours in a second. This is what I'm talking about. This pop right here was the new all-time high. It was intraday, but that was the new all-time high. Awesome, right? Up like 0.5%. Good start to the day. And look at this, guys. After hours. I thought, at least here, okay, finally the bleeding's done. Let me just crawl into the weekend with whatever I have left of me. It's over, right? Well, no, it's actually getting worse. I don't know what happened right here at 450. I don't see nothing on TradingView, at least, that says something new came out. Maybe there was, and I just haven't seen it yet. Let's go to Amazon quick. Oh my god. Oh my god, it's at 212. What the hell's happening? Amazon's already down 5%, and now it's down another 1.6 after hours. Yeah, we're not really dealing with a scripted video at this point. I'm just going through the motions live. So we're down 6.5 from yesterday's close to right this moment after hours, down 6.5%. Oh my god. So now I'm going to be down hundreds of dollars at this point. I bought Amazon at 217. We're at 213. Obviously, we don't know what Tuesday morning's going to look like. It could be a gap up. You know what I mean? But as of right now, where it's trading at this moment, we're down $4 from where we bought it. So we're probably going to be down $250 to $300. And I was just up almost 900. Look at this daily candle on Amazon. Okay, so where do I even begin? We're kind of all over the place. Do I go back to SPY? No, we'll just stick with Amazon. So, yeah, I bought Amazon right here. You can see the circle barely. Let me zoom out. So right here is the green circle. This is where I bought it, right at 217 on this dip from the all-time high. It was down about 8 to 9% off its high. I thought it was a solid entry point. I'm looking at these levels over here, prior tops, prior bottoms as a potential support area. Mag 7 stock, one of my favorite companies. The market was overall good, overall bullish, still going up. It's just that Amazon itself was having a correction. I wanted to take advantage of a correction on one of my favorite stocks, a tech stock, a Mag 7 stock, AI involved, all the good checks all the good boxes. And it was an opportunity. A good one. So I bought it at 217. And I was hardly ever red. It was pretty much the bottom of that day. We popped up, came back down for a second, back to break even, but then it popped up again. Flashed down again on the 6th, October 6th. Back down to break even, maybe slightly red for a minute, and then came all the way back up. And we got a good entry is what I'm trying to say. And then this week, up to 226 on Wednesday. Thursday comes, dips down to 222 at first. I'm like, oh man. But then it rips all the way up. And the market was actually red yesterday. SPY was down on Thursday. Right here. This was SPY. It was a red day in the market. The Qs were even worse. But Amazon was green. Very strong. Strong push all day up to the highs. Close at the highs. Awesome. We're at almost 228. I had a covered call at 230, expiring today. We were at 228 yesterday. It was going to be a perfect situation of us reaching the covered call strike on the day of expiration. Perfect opportunity because it provides you the best opportunity for a roll, while also allowing you to keep 100% of that appreciation because you didn't go beyond the level at which you're capped at. It's still under your cap, So you are gaining all that upside, and because it's expiration day, you can easily buy it back for cheap and roll it out to next week. And because the price is so high, because it appreciated, you can get an even higher strike, even more upside. Perfect, 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 perfect. Now, I actually decided last night that I was going to close Amazon. If it got to my strike at $230, right up here, I was actually going to close it, because at that point, I calculated I'd probably would be up $1,000 on the trade, and for me, that would be excellent. $230 would be approaching some resistance. Oops, let me drag this over here. You know, you could easily call this area resistance right here, and $230 would be pressing right up against that area. So I thought, you know, capturing a really nice move up 1,000, entering a resistance zone, that's good enough for me to close it. I know I could hold it even longer, possibly make even more money, but at the same time, when I see $1,000 staring me in the face, it's really hard to not take it. And that's what I did with HIMS. My HIMS trade a few weeks ago, I was up 1,000, captured a good move. I really tried to let it work, and it did. I did let it work. It went up to 1,000. I took it off. I was going to do the same thing with Amazon here. And man, we were so friggin' close. Up to 228.25. And now we're down to 212. So down $16 a share from the high of day. And it's getting worse as I speak. That's what makes it so tough. Now, Okta also had a bad day. Right? It's back down to the bottom of all these candles. You know, we're back down at the lowest level of the support. It just continues to struggle to get beyond 94, 95. You know, it never gets that push. Every time it does have a push, it comes right back down. And then you get a day like today, just right back to square one. That sucks. But I'm not really that concerned about it. It's not bothering me really at all. Because the trade has been around break even, slightly red for a while. This really doesn't change too much. The fact that Amazon was up over $800 and I was just like $1.50 away from closing the trade to possibly lock up 1,000, and then in that same day, we go from that potential outcome to now we're down maybe $500 in a single day. So that is just so frustrating. Now, there is good news. There is good news. The good news is I have a lot of cash because I'm only in two positions, Okta and Amazon. That's it. Both positions are just one contract. So it's a 25% or a quarter position. I can go up to 4 contracts. So if it does go lower, which it is right now, I can add to it. That's always been the plan. That's how we've constructed these trades. And I've yet to have to add to either of these trades. So we're fine. We got enough cash to add to these, but we also have more cash beyond that because I don't have 2 other positions. Usually I have around 4 positions, sometimes maybe 5 positions. In this case, I only have the 2. So we have plenty of cash. I'm at about 75% cash right now. So that's great. That's exactly where you want to be portfolio-wise during a moment like this when the market's really coming down. 75% cash. That's awesome. That's a ton of dry powder to take advantage of this drop. I understand that. It's just painful that Amazon, where I had it, where I was so close to the finish line of closing it, to now being dragged not only back to the start, but beyond that, further behind the starting point. So frustrating because it's like a $1,500 swing. Okay. Now that I'm done with that, like I said, there is good news. I still have a ton of cash. I'm also not in UPS. UPS was one of my latest trades. I got out up here, 86.50, and now it's back down to possibly making a new low. So I got out there, got away with it, clearly, because it didn't go too much higher from when I sold it, and now it's all the way back down. Had I been holding it, I would be red on this position too. Constellation Brands, another trade that I just finished. I even have the circle still on it. I bought it up here, added down here. It came up. I closed it right at this red circle at 145. and now it's back down to 141, which is my break even. So if I was still in Constellation Brands, and by the way, this ended up being like a $500 profit, had I not taken that and had I tried to let it work and held on to it, well, I'd be right back down to flat, break even. Boston Scientific, kind of the same thing. This was a trade I entered around here, somewhere around here. I don't think I have the circles on it anymore. But I got in around 95 or so, and I sold it up here, and now it's back down. It's even lower after hours. So if I was still in Boston Scientific, I would be red, and it would be worse. And not only would these positions be worse and in the red, but I would have a full slotted portfolio. I'd have Amazon, Okta, Constellation, UPS, Boston Scientific. I'd have a maxed out portfolio, very little cash, and positions that are in trouble. So I'm fortunate that I'm not in that situation. I only have 2 positions. They're just one contract each, and I have $18,000 in cash, almost $19,000. So when you put it into that perspective, it's like, all right, we're actually in a pretty decent spot. We can either, there's a lot of stocks that we could possibly take advantage of. HIMS. I was in this thing recently. I got out around 56, 56.50. Now it's at 53 and getting worse. Pfizer, something I've been watching, that's now at an even lower spot. UPS, I was in it. I said I would possibly look to re-enter it if it got back down to the bottom. It's here. That's another opportunity. Darden Restaurants. I bought a call on this recently. It had earnings. It dropped. I said the earnings report was actually pretty good. I like their portfolio of restaurants. Let me buy a call. Bought it right here. The options chain is not crazy liquid. There's only monthly expirations, but I said that's fine. I'm not going to wheel it. I'm just going to straight up buy a call option with a later expiration and just let it work, because I think it can get back up to 190. And it did. I booked a small profit, $100, but now it's back down even beyond where I entered before. Now it's at 180 after hours, even lower into this demand zone. Another possible opportunity. So plenty of opportunities now, especially if it gets worse. But what if it's going to get worse beyond that? We also got to factor that in. Do we want to enter right now? Or is this going to get worse? Is this finally the fall sell-off that I was anticipating? That commonly happens. September is historically the worst month of the year. We didn't get that. It was a pretty solid month, which is a little unorthodox. Usually we get a decline in September, maybe October. Could this be it? I mean, the way I see it was this gave investors the reason to take profits. Because let's be honest, this was a pretty frothy market. I mean, there's not the jobs data isn't that good. Powell still sounds a little hawkish. Inflation is being stubborn. Like, there's reasons for the market to not be up and away. It's just that all those reasons weren't really meaningful for the market. The investors just kept buying. But now that we had something that came out of nowhere that no one could anticipate, it caused a reaction. It tipped that first domino. It's almost like this market going up and away, even though the macro isn't that great. It's kind of like building a house of cards, and all it takes is that one sudden shake of the table, and that is the tariff announcement, to knock down the whole thing, because it's a very fragile structure, because it's not really built on a solid foundation. You could argue that this massive market rally from the tariff lows of April wasn't really built on a solid foundation, and all it takes is that one sudden knee-jerk event to knock it all down. And then investors are like, oh, well, all these investors have great portfolios now and great profits as we're at all-time highs. It's going to give them a reason to take profits, to sell, and maybe wait for a lower entry. All it takes is that first domino to fall, and then everyone decides to do the same thing, and you get a sudden slide. That's kind of what I'm seeing right here. It makes sense, but the question is, how far will it go? I don't know. But something to just be patient with, I guess. Maybe wait for some clarity. You could just try to take your shot right now That's going to be risky, but it could be very rewarding because I'm sure that first bounce is going to be pretty powerful, and if you're able to time that right, you could definitely make some good money and capture a really good buying opportunity down here if we just go right back to the highs. But if you want to be safe, let's wait to see if there's anything official with the tariffs yet. Let's hear from Trump. Let's see if Congress does anything about it before we decide whether or not the coast is clear. But yeah, just an ugly, ugly end. We'll have to see what happens. We got a long weekend. People are going to digest everything. It could mean that after everyone digests it, they realize, wow, this actually is bad. And then Tuesday has a low open. I don't know. Or they find out, that was an overreaction. I can't wait to buy stocks again as soon as Tuesday comes. Let's do it. And then Tuesday comes and we get a nice gap up and we're up 1.5%. Could happen. But as far as I'm concerned, my portfolio, we are in a pretty decent spot overall. It sucks what happened with Amazon, the flip in that position, but we have a ton of cash. And quite frankly, I think I'm just going to, I don't know, I guess it could go either way. I'm thinking about just holding on to my 2 positions and just being patient, adding money to those 2 positions and nothing more. But then again, if I find another stock that I like, that's at a really nice level, oversold from this drop, I might start a new one. But as of right now, I'm leaning on the side of I'm just going to stick with my 2 positions, and all the capital that I have right now is going to be dedicated to those 2 positions and managing them. Because I know Amazon, it's already getting to a point where maybe I need to add to it. If it gets down to 210, that's going to be costly. That's going to be like another $3,000 to get to those 2 contracts. And if it goes down even more and I double it again, another 2 contracts, that could be another $5,000. So let's just manage these 2. Amazon's a great company, and building a position down here in the low 200s, I think will end up being very beneficial in the long run. So let's see if we can make that happen. I don't want to spread the account too thin by adding more positions, then all of a sudden I don't have enough to take advantage of Amazon. So that's what we're doing. That's what we're going to do here. So with all that being said and done, let's try to reel ourselves in here and finish this video in a calm manner. So let's bring up the Excel file. This is what happened on the week. As you saw in the thumbnail, we made $547 in realized gains. That's awesome. A big part of that was the Constellation Brands trade. So I kind of just, I just realized now that I didn't explain the fact that I closed it. I just kind of said that I did in passing. But yeah, this was a trade that I just closed this week. It had a nice push. It had earnings on Monday. That's right. In the last video, we talked about that. And it was up about 3%. And I tried to close it first thing in the morning. I ended up getting filled. I left a little bit of money on the table because it did push up after I got filled slightly. But then, as I showed you, it's come back down. So, it's fine. We locked up 440 in the process there. And then Amazon covered call that I closed today, $67. An Okta covered call that I closed today, $40. Grand total of $547. If I go to the closed wheel strategy trades, here's the Constellation one. So covered calls altogether, $102 in covered call income. I had an average cost basis of $31.60 on the leaps. I closed them for $33.92, so I made $464 on the base position, $102 in covered call income for a grand total of $566 total on the trade, on the campaign that started September 10th and ended October 7th. So just about a month, made 9% total on the capital for an annualized return of 129%. So that was great. I was very happy for that earnings move, and now that Constellation's down even more, I feel very good that I'm out of it. So here's earnings. Let me just brush over that quick. So earnings was Monday night. We actually had a red Monday, so Monday declined heading into earnings, so that put us at an unfavorable starting point, but it did push after earnings, after hours. The report was better than feared, so it just wasn't as bad. It was up 3%, and it kind of held that. It was actually up even higher in the pre-market, so that was awesome, up to 145. As soon as it opened, I put a closing order out there. It took like 3 to 4 minutes into the market open before the options pricing adjusted to reflect the 3-4% increase. Because I submitted my order to close it. I wanted $500. I submitted it, and just like the options just weren't moving. The covered calls didn't change. The leaps position didn't change to reflect the big jump. I'm like, what's going on here? And the last thing I wanted was for this thing to dump after the first couple minutes. Sometimes that happens after an earnings move. I'm like, let me get out of this thing. Like, we're up to 145 right now. Give me the exit order. And it just was not updating until I lowered my order a little bit, my limit order. And then all of a sudden, the options chain like reflected it, like updated the pricing, reflected the jump. I got filled, and then Constellation moved up a little bit further. So I got out right here, like 145, and then it jumped up to 147.50. I left maybe a couple $100 on the table had I timed it perfectly, but whatever. We got out there, and then it sold off the rest of the day. And then obviously today, even worse. So glad to be out of it. Got a nice trade out of it, $500 or $560 total. And we're done with that. So now we're just dealing, as I showed you, with Amazon and Okta. And it looks like we might be putting more capital to work next week by adding to these positions. Now I'm seeing Amazon's in the 211s. What the hell's happening? Amazon is getting so much worse after hours, dude. 211.50. What the hell? It's down $5 after hours. What is going on? This is crazy. SPY's down $5 after hours too. Jeez. Oh well, this could be an opportunity. You know, you can make really good money when you have multiple contracts. And the way I'm trading, I won't get multiple contracts unless the stock sells off. So if it sells off enough, I get 2 contracts, then I get up to 4 contracts, and then it turns around with 4 contracts. That's when I can truly make some serious money. Just like my Microsoft trade earlier this year, I got up to 4 contracts. I had earnings. It popped up. I made $5,000. That is where the big money can come in, is when you build a bigger position. And I can't get that bigger position unless the stock comes down. So maybe this is a good thing. I'm trying to see the silver lining, and now we're in the 210s. We just cracked 211. All right, I'm going to end this video before this gets worse. Enjoy the weekend, guys. I'm going to try to forget about the markets for the next 3 days. Thank you guys for watching. If you enjoyed, hit the like button, subscribe for more content, and I'll see you guys next time.